If you want to invest in the stock market, you need interest, you need patience, and you need money, most importantly. I am going to break these things down to help you understand them better. For interest, when you tell yourself that you want to make money through stock investing because people are doing it, you need to go on YouTube or Udemy and take courses on, stock investing. See if it's something you're interested in before you proceed. One of the things I did in 2017 was take a bunch of courses on Forex trading. And I quickly realized that Forex trading was not my thing. I am not against Forex traders. I don't have anything against Forex traders, but it's just not my thing. I would prefer to invest in companies through the stock market than to trade Forex. And I quickly realized that when I took courses on Forex trading and stock investing, I prefer stock trading. So interest is the very first thing you need. After you've decided that this is really something you want to do, the next thing you'd want to do is choose a platform that you'll be trading with. There are so many platforms you can use to trade stocks in Nigeria. Just pick one of them, sign up, do the KYC where you either submit your NIN or BVN or any other information, and then go to their Learn section. Learn how that platform works, learn how to trade stocks with them first before you start depositing money and all of that. And then once you've learned how to use the platform, the next thing I would advise you to do is credit your wallet, fund your wallet with some money so you can start investing in companies. One of the things I used to advise everyone to do is make sure you have more than $5 when you're crediting your wallet. Why is that? Well, because most of these platforms will already charge you $1 when you're trying to invest in a stock. They charge you $1 as their processing fee. When you're also trying to sell a stock, they charge you $1 as well. So investing something lesser than $5 or $5 is really small, because once you buy a stock, they take $1. You sell a stock, they take $1. How much do you have left? So it's always good to invest with more than $5, maybe $6, $10, $20, or higher than that. So it's really, really important that you pay attention to this bit, because if you're investing with small money, you're not going to be getting good returns over time. So really, really pay attention to how much you want to use to invest in a stock. Then do your research. This is also very important. If you don't know what's going on in the market, you're going to lose money. So you need to follow communities on Twitter. You need to follow pages on Instagram. You need to read platforms like Yahoo Finance. There are so many platforms out there. There are so many communities out there that actually talk about stock investing. So try to follow as much as you can. Try to, get updates from them daily. Make sure you subscribe to analysts on YouTube. There are so many stock investing analysts on YouTube that are actually certified analysts that know what they are talking about. So you need to listen to these people and hear what they think about stocks like Apple, stocks like Meta as well. Research is very important. Information is very important. Knowing a lot about the stock market will save you a lot of losses. Also, you need to think long term. A lot of people who invest in stocks are not patient. They expect returns immediately, but stocks are not crypto. The stock market is known to reward patient investors. Every year, this S&P 500 averages 10%. It means that if you invest in the S&P 500 now, between now and the next 5 years, you'll most likely be in profit. So you need patience. You need to, be patient when you buy a particular stock. A lot of people try to compare the stock market to the crypto market, but it should not be that way, because the crypto market is very volatile. The crypto market is also not heavily regulated like the stock market. So a particular crypto can pump up now and people will be happy, and then the next thing you know, it will dump again and people will lose money. So the crypto market is different from the stock market. Don't invest in a company like Meta through the stock market and expect massive returns immediately. That's not how it works. Right? You need to give yourself time. You need to make an investment and just leave it there. Then over time, of course, your money is going to appreciate, and then you can sell or just leave it there to grow more, especially if the company is growing. You have to be comfortable losing money as well. Losing money is part of the game, right? You can invest in a company once and then you hear that one thing they were supposed to launch, they are no longer going to launch it, and people will sell their shares and pull out. So that happens a lot in the stock market. You need to be very, very comfortable losing money, because that's going to happen. Sometimes you invest in a company after doing your research and everything is looking good. Then the next month you hear that, the Department of Justice has sued them, or the European Union has barred Apple, for example, right? They have lawsuits from time to time where you hear things like they collected a customer's data and they were sued for it $40 million. And because of that, it will cause investors to pretty much pull their shares and the price of the stock will go down and you start to lose money. But if you're patient and the company is a good company, your money is going to appreciate over time. That's my time. Don't forget to subscribe to my channel because I'll be leaving more tips like this. And I'll see you guys. Bye.